Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak podcast, available every morning on Apple, Spotify, or wherever you listen. It's Thursday, the 21st of November in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, when great still isn't good enough, Nvidia exceeds sales forecasts, but warns rising costs will eat into margins.
US prosecutors accuse Gautam Adani of being involved in an alleged $250 million bribe plot.
Plus, we take a look inside the charm offensive to lure Britain's super rich overseas.
Let's start with a roundup of our top stories.
Nvidia has delivered a revenue forecast that failed to meet the highest expectations. The world's most valuable company is predicting fourth quarter sales of about $37.5 billion. That's slightly above the average analyst's estimate, but below the most optimistic ones of $41 billion. CEO Jensen Huang says demand still exceeds supply.
Blackwell production is in full steam. In fact, we will deliver this quarter more Blackwells than we had previously estimated. And so the supply chain team is doing an incredible job working with our supply partners to increase Blackwell.
Despite Jensen Huang's bullish comments, the firm also warned that production and engineering costs will weigh on profit margins going forward. The news was met with a tepid reaction from investors who have bid up Nvidia shares almost 200% this year. Shares fell 2.5% in after-hours trading.
India's Gautam Adani has been charged by US prosecutors over an alleged bribery scheme. Federal prosecutors say that the tycoon and other defendants promised to pay more than $250 million in bribes to Indian government officials to win solar energy contracts worth billions of dollars. The Eastern District of New York, which brought the case, says the defendants then concealed the plan as they sought to raise money from US investors. Phone calls and emails to Adani Group's US offices requesting comment weren't immediately returned. The indictment has caused Adani Group stocks to tumble, while units of the conglomerate also say that they have now scrapped a $600 million bond offering.
The founder of Archegos Capital Management, Bill Hwang, has been sentenced to 18 years in prison. In July, a jury found Hwang guilty of misleading banks into providing Archegos with billions of dollars in trading capacity. Bloomberg's Shaquille O'Mara says the former financier expressed regret during the proceedings at a court in New York.
Wang was remorseful, telling the judge he felt deep pain for what happened to Archegos. Now, prosecutors, they wanted a 21-year sentence because they said that Wang was a repeat offender in all of this, because back in 2012, he pled guilty to insider trading with another company, Archegos Capital. Now, on the other hand, his defense, they wanted no jail time, but the judge says that was utterly ridiculous.
Our reporter Shaquille O'Mara there from outside the courtroom. Archegos fell into a spiral after its March 2021 sell-off in Viacom shares prompted billions of dollars in margin calls, leading to the collapse of Wang's $36 billion family office. The fallout included the demise of Credit Suisse and significant losses at Morgan Stanley, UBS, Nomura Holdings and other banks.
Now, Ukraine has fired British cruise missiles at military targets in Russia for the first time. Sources tell Bloomberg the UK approved the use of Storm Shadow missiles in response to Russia deploying North Korean troops in its war against Ukraine. The strike comes a day after Ukraine deployed US-made ATACMS for the first time to hit a military facility in the western Bryansk region. Ukrainian MP Yevgenia Kravchuk says that Russia's actions led to the developments.
Kremlin understands that they need to put this pressure so the Western allies and Ukraine would blink first and, sort of fell into this emotional drain and push on the battlefield.
Ukrainian MP Yevgenia Kravchuk speaking there. The country's leader, Volodymyr Zelensky, has long called for Western governments to bolster their military support. Yesterday, the Kremlin said that it's prepared to discuss a potential ceasefire in Ukraine with President-elect Donald Trump when he assumes office in January.
Car sales across Europe are stagnating, pushing car makers to make severe redundancy plans. New car registrations inched up just 0.1% in October compared to a year ago to 1.04 million units. Bloomberg's Global Autos editor Craig Trudell says he's seeing profit warnings across Europe.
You're talking about Volkswagen or Stellantis or BMW, Mercedes. It's really been across the board that a lot of manufacturers are having trouble with the increase in competition at a time when we're not seeing demand growth. And so, that leads to some real need to take a look at how many people you're employing, plants you've got running, and whether you need to take shifts out or even go so far as to potentially take plants down.
Trudell adds a key factor has been governments pulling support and subsidies for electric vehicles. Ford is looking to cut 4,000 jobs, or 14% of its European workers, after already cutting a similar number last year. And Europe's biggest automaker, Volkswagen, faces widespread strikes as it looks to cut €17 billion in costs.
Now, Britain's parents have doubled the amount that they give to their children, largely to help them buy a home. Research by the Resolution Foundation has found that parents gave £29 billion over 2 years in 2020. Now, that is up from £13 billion in 2010. Bloomberg's James Walcock has more.
In 2010, the average house price was £168,000. 10 years later, $247,000, 2/3 higher. That spiralling cost helps explain why the Resolution Foundation say it takes the typical young family more than 14 years to save up a deposit. Now, increasingly, their elders are stepping in where they can, passing on cash to get their kids out of the expensive rental market. The findings highlight the scale of the UK's housing crisis, with the think tank warning the economy could be harmed by a trapped generation of young people. In London, James Woolcock, Bloomberg Radio.
Those are your top stories on the markets. Yesterday, the S&P 500 climbed back to close flat after falling 1% on Russia-Ukraine tensions. The US dollar strengthened another 0.4% in yesterday's session, with euro-dollar coming close to breaching 105. Gold climbed by 0.7%. It's rising further today. In Asia, Bitcoin has jumped almost 3% to just over $97,000. And the Hang Seng Tech Index is weaker in Asia, 1.2%, as investors digest those soft Nvidia earnings.
Those are the markets. In a moment, we'll bring you more on those Nvidia results and also our reporting on how countries are trying to tempt Britain's super rich to move overseas.
But first, bananas. There's an artwork that's gone on sale. Could you believe that if you duct tape a banana to a wall, it would sell for $6.2 million?
Oh, wow. I think this is extraordinary. So this is a 2019 artwork. It does indeed consist of a banana and a piece of duct tape, and it goes on a wall. And it was sold at Sotheby's in New York for more than three times the pre-sale estimates in 6 minutes, apparently, of furious bidding. And it was bought, this sculpture, by the artist Maurizio Cattelan, by a crypto entrepreneur, Justin Sun, who actually spoke to Bloomberg.
Look, this is, he talked about that, he's bought a lot of art. He's bought purchases of Picasso and Andy Warhol as well. Was particularly captivated with this, and he's not alone. This has gotten quite a lot of critical acclaim. I mean, I kind of make fun because it is a banana sellotape to a wall, but it has also been considered to be quite an elevated piece of art. It's been shown at the Art Basel in Miami Beach, first of all, as well. It's been drawn huge crowds too. But I think the most bizarre part about it is that it's not like you get the piece already installed on a wall. You just get a banana and some duct tape.
And apparently a big instruction manual about how to hang it and where to place it and so on. But I like the quote from the crypto entrepreneur. He said that it echoes with our idea of decentralization in the crypto world, because this is a conceptual artwork. It's impossible for you to destroy the artwork itself, which I thought was quite relevant.
I don't know if I've ever had a banana at the bottom of my rucksack. I think it's a different argument about that. Anyway, enough on that for the moment. Let's bring you more on our top story this morning, and those are results from Nvidia beating revenue estimates in most product categories, but still falling short of some analysts' lofty expectations. Let's bring in Bloomberg Intelligence senior analyst Robert Lee for more. Robert, how strong then were these earnings from Nvidia in the third quarter?
I guess it's a bit of a repeat as we've seen in many previous quarters with Nvidia. There were strong numbers, but that was largely expected and built into the share price. Share price has been flirting with all-time highs over the last couple of weeks, and is trading on a lofty valuation. I think most would agree. The only minor bit of disappointment was, whilst the guidance for the next quarter did actually technically beat expectations, there was a bit of a so-called whisper number out there, and the guidance didn't quite top that. And it's inevitable you're going to get a bit of profit taking on the back of that. But I don't think the results raised any great fundamental concern. Demand continues to outstrip supply. It's superlatives all the way.
Yeah, it's about where you put the bar and how well the company's leapt over it or not. In terms of the rollout, though, of the highly anticipated Blackwell chip, that has been one of the issues. And indeed, we heard a bit from Jensen Wang on that topic earlier.
No, absolutely. This is their next generation chip, which is sort of being sampled to customers in a moment. I think they said they sampled to around 13,000 customers during the quarter. There were some earlier production delays, but they seem to have got through that in the near term. However, this is a large and highly complex chip, and driving it through to volume production, which is what's going to happen over the next 2 to 3 quarters, is a really hard thing to do. It's a non-trivial task, and you're operating at the cutting edge of semiconductor technology. So I'm not in any way flagging that there will be disruption, but there is definitely scope for it when you're dealing with such a highly technologically advanced chip. So I think there is still residual execution risk for them and their main foundry partner, TSMC. So I think, investors definitely need to keep that in mind, and we want to see a nice, smooth rollout. And actually, just one very brief thing, because the production yields and therefore the margin on this new chip won't be particularly high in the near term, and again, that's as expected, that will actually depress their gross margin a little bit. So we're going to see the margin come off for the next few quarters and then hopefully see a rebound into the second half of next year. But again, where's the near-term catalyst for this? Where's the near-term positive surprise? It's sort of hard to see at the moment. So I wouldn't be surprised if we see more profit taking in the near term.
Okay, Robert Lee, Bloomberg Intelligence Senior Analyst, thank you very much for joining us.
Now, to one of our deep dives this morning. The UK's super-rich are facing a charm offensive to lure them to other global wealth hubs, offering lower taxes, places like Dubai, Greece and Singapore. Joining us now to discuss this is Bloomberg's Ben Stuples. Ben, very good to have you on the programme. What are they being offered? How's it being done exactly?
Good morning, Caroline. Thank you for having me on. Fundamentally, the UK's ultra-rich are being offered lower tax breaks, lower tax rates, more specifically to be able to live overseas, sometimes not even live in the location. So that is a fundamental offering. Why? Because the UK is curbing, as of the early next year, tax rates for its non-dom population. That ranges from multi-billionaires to City of London bankers. And how are they doing this? Well, there are roadshow events, for example, where you can imagine us trying to book a holiday. That's sort of what's going on here. There's sort of different options being offered. So it's sort of showcase events being offered in 5-star hotels and some of London's best places that you can imagine. In Knightsbridge, for example, there was one last week. And the other side, you've got territories trying to cultivate relationships with City of London firms. Lawyers are being lobbied in the City of London right now, left, right and centre, about their relationships with the world's super rich in London, and just testing the waters of how much does your client really like living in London?
Well, why now, I suppose? Is this about the tax changes? What's driving this demand for these sorts of roadshows?
That's exactly right. The timing, the territories that are sort of landing in London right now, Abu Dhabi, for example, they had an event last month in a 5-star Jumeirah hotel in Knightsbridge. They do these events all over the world. So they do it in Hong Kong, elsewhere. So they would say, we always do this. But the timing is just right now, and the audience are maybe a little bit more receptive. Because last month, as we may all remember, Rachel Reeves, among many other policies, brought in sweeping changes for the UK's non-dom regime. So she scrapped it. She brought in a regime that's 4 years, for a new regime that is similar to what we currently have, but 4 years versus the current term of 15 years. Now, if you're a non-dom and suddenly you've gone from, I can claim tax breaks in the UK for 15 years, currently, and then in the future, if I'm only having 4, well, suddenly the game's changed quite a lot, and that's making other countries go, hang on a second, I thought London was off the cards for luring other residents, but actually now London is far less attractive if you are prioritising your tax as a reason for why you're living in this city.
Yeah, and London would argue, that it's more than just that. But of course, what does it mean for the UK? I mean, it's interesting, isn't it, that your reporting shows that others have taken note so much?
It really is. It really is. And I think that's a really fair point to make about the London lifestyle is still a really attractive reason to be here. And I think what Rachel Reeves has done actually is call the bluff of the super rich who is saying we might go. I think what she said is, okay, if you're going to go. We're bringing in a 4-year regime, which is quite competitive with some other European nations. Spain has a similar regime, for example. But Italy and Greece, they have 15-year regimes. Cyprus has a 17-year regime and has an event next month in the London Stock Exchange specifically targeting non-doms. But what folks say is London has for a long time had a very bloated millionaire population, one of the world's highest, per capita. So some folks are there saying, well, this is maybe just if you imagine London as a stock, maybe this is just a natural correction in the market that's going on right now.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.